More pain in the markets today. Assalamu alaikum. Today is October 23rd, and Bitcoin is trading at under 66,000, about 65,500. Dogecoin is at 13 and a half cents, and Solana is at 166. We're going to look at the main things impacting the markets today, and then we're going to talk about Enphase Energy, a company that I've spoken about previously. I was an investor in this company some time ago, ended up selling, and that did end up working out well, considering what transpired after that. Assalamu alaikum, Chocolate. Nice to see you. So, looking at the indexes today, basically everything is down. Dow Jones is down 1.1 percentage points. Nasdaq is down 1.85. S&P is down 1.1. Russell 2000 is down 1.3%. The dollar index is up close to half a percentage point. And the big news item, the big impactor on the markets today is the VIX. The VIX is up 7.64%. Investors are more nervous about the markets today than they were yesterday. And that translates into lower equity prices. So for Tesla, down around 2% today. Even energy stocks are down. So PLL is down close to 10%. Iris and Bitdeer taking it on the chin yet again today. Solar has taken a big hit. If we look at First Solar, down 5%. Enphase Energy down 15% today after earnings. And the nuclear stocks that were doing great last week have pulled back and retraced some of their gains. That is to be expected. Now, what is going on here? Now, if you tune into CNBC, they talk a lot about nervousness about rate cuts, and perhaps the rate cuts don't happen. I don't really think that's the case. If you look at the Fed Watch tool, you can see that the market is still pricing in a 91% chance of a 25 basis point cut in November. And if you look to December, you can see a 30% chance that we get at least one 25 basis point cut, a 66% chance that we get a 50 basis point cut by December, and only a 2% chance that we are at the same levels that we are today. So I don't really think it is the monetary policy and the expectations of what is to come in terms of monetary policy that is causing pain in the market today. Nor do I think that the elections necessarily are and their prospects are causing the pain that we're seeing in the markets today. If you look at the percentages, probabilities for candidates winning, you can see that Donald Trump is still ahead of Kamala Harris by some 20 percentage points. And so that's as wide of a margin as you're going to get in terms of a presidential election before the election, save for some really outlandish event that could happen. That's really, as big a margin as one can expect. I've seen some prediction markets north of 60% for Donald Trump winning. So there's not much more certainty that you can get prior to the election regarding the result than what we have right now. So I don't think the elections necessarily are the source of nervousness in the market. Primarily, I think it's two things. Number one, we've had a pretty strong run up until this week, and the last 3 days have all been down days for the market. And so some profit taking is happening. I think that's logical to assume. And also, I think the geopolitical risks are what they are and perhaps are more acute now than ever. All indications Sorry, all indications appear to point towards an escalation in the Middle East and perhaps even in Taiwan as well. But I think obviously the probabilities for that are a lot less than escalations in the Middle East are, or the probabilities of that are. If you look at the map for equities today, you can see that this is basically red all around. Even the green that we do see is pretty modest. GE, for example, up 3.5%. That's the greenest on this map that you're going to find. And that's not really much. Even energy today is down. So a red day across the board here. If we look at the stock in focus for today, Enphase Energy down 15%. This is a company that produces primarily microinverters, and so microinverters are basically pieces of hardware that you add to solar panels to make them autonomous um, in terms of their uptime and downtime, and makes solar panel installations more resilient, considering each solar panel is basically independent. This is a technology that Enphase Energy actually pioneered, and it expanded from that initial product into other products, including batteries and including uh, software systems to manage solar panel installations. So basically, everything solar is what Enphase Energy does. And right now, we're looking at a stock that is uh, year to date down 40%, and it's basically at its 52-week low. So 52-week low as per this chart, at least 75. We're at 78 right now. If we look at the reason for that, well, that's their third quarter results that they announced yesterday, which included a slowdown of 15% in sales in Europe, and also a revised guidance downwards for revenue moving forward. And nothing really kills a stock more than management revising down previous estimates, because that means there's going to be a slew of analysts coming out with reduced targets for the stock. After all, I mean, the analysts can't really uh, go against what management is predicting for itself. So many times, management's guidance is basically what analysts are relying primarily on, and so a revision downwards will cause a revision downwards for all analysts' stock price targets, or at least the majority of them. If we look at the details here, that being said, honestly, I don't really think that the report was that bad. There's definitely some bright spots here in this report, and we'll refer to them. So, quarterly revenue 380 million. Just to put this in context, this is a company that currently at its 1 year low, it's trading at 10.5 billion in terms of market cap, and also it does have 1.6 billion in cash. That being said, it does have debt as well. So they had quarterly revenue of, let's say, 400 million. If you analyze that, that's 1.6 billion, and um, therefore a market cap of 10.5 billion, not really that unreasonable, considering that their gross margins are close to 50%. So gap gross margins of 46.8%. So going by the generally accepted accounting principles, that is, in case you're wondering what gap stands for, gross margin of 46.8%. Now uh, they do have IRA benefits, so Inflation Reduction Act, that is helping their margins. So if we were to take out the benefits that they're getting from subsidies, gross margin would be closer to 40%. So the subsidies are adding close to 10% in terms of gross margin to their results. So that's something to keep in mind. That being said, even without subsidies, a gross margin of 40% is pretty good. It's not bad at all. Their operating income was $101 million for the quarter. Free cash flow, which I think is a bright spot for this company. Free cash flow is 161 million. That's pretty strong. Ending cash and cash equivalents and marketable securities 1.7 billion. Sorry, I think I said 1.6 earlier. 1.77 billion for the cash that they have on hand. You can see gross margins are pretty much steady. They did improve in Q3 2024 versus Q2, so 46.8 versus 45.2 in Q2. And if you compare with last year, and this is punishing the stock a bit, gross margins are down a bit, but not too much. I don't think anything to necessarily cause deep concern for the company. It was 48.1% gross margins were in Q3 of 2024. In Q3 2023, it was 48.4, and so a difference of 1%, less than 1 percentage point between the gross margin numbers if we're comparing year over year. So from that aspect, from a profitability perspective, I think they're doing very decent in terms of maintaining their profitability, which is extremely important, especially when you're analyzing solar product companies, because you just want to make sure that their product isn't a commodity. It's not something that China is just going to uh, compete out and any rivals that they have, because that's typically what happens with commodity components of the solar industry supply chain. China ends up controlling all of the commodity components in that supply chain, and you want to make sure whatever company you invest in is not producing a commodity product, something that can be easily replicated, that doesn't have any moat around it. And one of the ways to verify this is to check their profitability, their gross margin, their pricing power. If it's high, then this is a good indication that what they are selling has pricing power and has somewhat uh, of a technological moat around it. Total revenue, especially if that gross margin is consistent over time. So that means um, that the gross margins are not a function of simply demand outstripping supply for a limited period of time. It's actually more likely attributable to a technology or a a technical moat that they have around their business. So from that aspect, gross margins are maintaining pretty strong. And I did mention that revenue in Europe decreased approximately 15% for the third quarter of 2024. However, it is notable that revenue in the United States for the third quarter of 2024 increased 43% compared to second quarter of 2024. So yeah, Europe slowed down, United States picked up. Gross margin was 48.1% in the third quarter, as we mentioned, compared to 47.1 in the second quarter of 2024. Non-GAAP gross margin, excluding the net IRA benefits, so excluding the subsidies, was 38.9% in the third quarter, compared to 41% in the second quarter of 2024. Again, here, just a small difference in the gross margins quarter over quarter. And they exited with 1.77 billion in cash. We mentioned that. Now, something that is encouraging about this company is that they repurchased shares and they have a pretty strong history of doing that. And the average price that they repurchased their shares at was $114. Again, recall it's trading at $78 per share. The company purchased its own shares at $114. So this is a very encouraging fact. The company knows itself more than anyone else does, and it thought that $114 a share was a good use of its money. Buying its own shares at $114 a piece was a good use of its money. So if the company thinks that, then investors looking at a $78 per share price may be encouraged to pick up some shares. And they also mentioned that in the third quarter, this is another thing that I like about the company. They launched the AI-based software that is designed to optimize energy use by integrating solar and consumption forecasting with electricity tariffs. So what I like about this company is that they do seem to be constantly upgrading their line of products. They seem like a well-managed company. One of the reasons why a company is able to maintain gross profits and maintain profitability over time is effective management, and management that is always cutting the fat out of its operations. And it seems like Enphase has that. If you look at the business highlights for the company, there's a lot in the way of expanding into different countries and into different product lines and upgrading the products that they're currently selling. So all of that is, I think, positive for the company. If you look at this company and the short float, this is 10.62%. So anything above 10 in terms of the percentage of shares that are shorted, I think is high and will distort price movements. It'll distort them on the way down and on the way up. And so this makes for opportunities to buy on the way down and makes opportunities to sell on the way up. And if we look at Enphase's multiples here, it does seem like so we're not interested in trailing valuation, we're interested in forward valuation. So if we look at forward price to sales or forward price to earnings for the next 12 months, we can see that currently at 20.8, it is the lowest multiple that we've had at least for a year in terms of Enphase stock. And the same with price to sales at 6.9 for the next 12 months. It's the lowest that we've had in a year. So not only is the price the lowest, but the multiples that we're using to get to the price, the market is using to get to the price, are the lowest that they have been. So to summarize here, in terms of Enphase, we have a company that's in a secular trend, which is solar. We understand that the energy consumption per person on Earth is going to increase with time, and new energy sources are needed. One of the main sources of energy will be solar in the future. We understand that the margins for this company have been consistently high. We understand that this is a company that is in a often very cyclical industry that is very interest rate sensitive because a lot of purchases are done using financing, and we are approaching in fact, we've already started the process of monetary easing. And so the difficulty that we are experiencing with this, or investors are experiencing with this company, I think is temporary. There may be another quarter or two of relative weakness in a growth for this company, but I think that at these prices, I think that it's a reasonable pickup. That being said, I'm not sure that this is the fastest horse in the solar space. And so that's really what I would like to look at in more detail. If I were to, so currently I don't hold any Enphase energy, but if I were to buy, I want to make sure that the best return to risk ratio is what I'm getting in this industry. I've mentioned before, I do want to get exposure to this industry because I think that, growth is going to be phenomenal in the next few years. But I don't want to invest in a company that's, producing commodity like products, nor do I want anything that is in direct competition with Chinese, similar Chinese companies, because I do think that the Chinese have an advantage here with regards to solar, and so all of this needs to be, taken into consideration before investing. That being said, as I to summarize here my viewpoint on this particular stock, I think it's probably a good pickup at these prices. That being said, it's not financial advice, and full disclosure, I haven't picked up any shares, and I don't hold this company either. So make of that what you will. Uh, Rashad says, "Salam, alaikum salam, Rashad. How would the market react if it will be a split, a government versus red sweep?" I think a red sweep would be more encouraging for the market. I think a split would mean that not much is going to get done, not much is going to get passed. We already know that the two political parties can't really work together at all. So a red sweep would be more advantageous. Wa assalamu alaikum. Nice seeing you, especially during days like this. Should we buy the dip or will there be a further dipping? Well, if you're a member, you should, I think, take notice to what I end up doing. Um, Thanks. I'm glad you liked the session, wise man. Allah bless you. Rashad said, "Your statement is okay." There, sorry, that was not for me. Thanks, Taskeen. Really appreciate it. I'm glad you liked it. Yeah, that would be. So. Khalid says, Salam Rakaan, wa alaikum salam. Will election have a significant impact on the market? If yes, how to secure gains at the same time avoid FOMO if things go north or south? Well, inshallah, just tuning into these lives will be helpful in, gauging where we're at. And I do think that post-election, I think the market will have more momentum than it has right now. That even though the probabilities seem in favor of one candidate, that this is, it's not over until it's over. You don't know how many people show up for each party and so on. And therefore, removing that source of uncertainty will be good for markets. Azad Alam says, is Meta stock halal or haram? I would say Meta stock is one of the most uncomfortable stocks to hold for me on the market, period. Next only maybe Palantir. Only because I think Meta, if you look at Facebook, Instagram, I don't think they make people happier. I think they make people less happy. And I think that they typically promote negativity and they uh, promote things that are, contrary to Islamic values. And so I wouldn't touch it at all. Do I think Tesla will drop below 200? It's very hard to say. I do think that Tesla is a good value where it is right now. I can't predict near-term movements. I will obviously be very closely watching and listening to the earnings report today, which Tesla is scheduled to have after the market closes. So we'll get a lot more color. Hopefully, we get a lot more color with regards to what they revealed in the robotaxi event. It would be really great if we could get some more on the economics or the timelines for the release of some of the new products that they mentioned. But these things can be known ahead of time. That's why we'll be tuning in. Hassan says, thanks, Jazakallah, wa yakum inshallah. Hey, leave a like if you haven't already. Always nice to see you. And if you haven't become a PIF member yet, do become a PIF member. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.